All right, let's get to KG now for the data download, and just to get us across this market and the performance we're seeing. KG, I just did notice that we did look at a pretty big sort of split picture across the Mag 7 earlier this morning, but it looks like we've got most of them in the red now. I was also noticing that Western Digital was up like 8% earlier. We're just fractionally higher right now. Is there anything behind this sort of tech reversal that you're seeing, and why things are perhaps rolling over today?
Not seeing any type of news headlines from this morning. We know that there was maybe a little bit of back and forth between OpenAI and Nvidia, some comments that were made yesterday from OpenAI that could cause a little bit of a rift within this market, and Microsoft continues to sell off fairly aggressively. That was probably one of the first movers when you're looking at tech. If you're looking at the Mag 7 names, the Mags ETF down about 0.8%, but Sam, we have to keep in mind this actually is a critical area of support here. This is touching the 50 period or the 200 period moving average on the 50-minute chart for the E-mini S&P 500. There's also a critical option support level at the 6950-ish area. We're trading below that right now, but this is kind of your make or break. If we actually sustain and move another 10 points, 15 points below this current level, I think we get a little bit more concerned that volatility will re-rate higher, which it is. It's up around 17.3 right now, and we may get a bigger flush. But right now, I'm looking at this as an area of support for this market, at least for now. And yes, the tech names are getting hit at this point in time. Like to see a reversal there. Nvidia getting down to 180 also could be a support area. That's pretty much been the support line from the trend lows that we've seen over the last couple of weeks here. So we are seeing some selling, but it doesn't mean that everything's over and done with as of yet.
Yeah, I mean, we certainly saw some buyers stepping in to very much take advantage of the dip we saw in Asia overnight, particularly with some of those high-flying tech names. But as you mentioned with Microsoft, I'm seeing the software meltdown really accelerating this morning. You've got names like ServiceNow, I'm looking at Workday, I'm looking at Zscaler, Adobe, Shopify, Snowflake, all lower this morning. So something to keep an eye on. But you and I were supposed to talk about jolts now, but we're not, because the government shutdown. Now, obviously, we're not going to be saying Happy Jobs Friday either. But some of the comments that I've heard in the market this morning is perhaps it doesn't matter too much. And that is because the data that we've been getting, in fact, we just got some comments from Barkin as well, talking about how the eco data has actually looked quite encouraging. I mean, you and I were talking about some of the PMI numbers yesterday. Things are holding up. There might be some concern around inflation, but they're actually not going to meet until mid-March. So maybe we can afford to buy some time here. What do you make of it?
Yeah, so if you're kind of looking at the data for January as well as February, so the release dates of January and February, January does actually tend to see a lot of volatility when it comes to not only inflation, but the jobs report. Now, taking some of that risk off the table because of the partial government shutdown actually could be a tailwind for markets. We saw that the last time around with the government shutdown. The lack of data actually gave bulls a little bit more ease that they can actually trade off more of the fundamentals as well as some of the news flow rather than the economic data that might be a little bit of a headwind here. I would get a little bit concerned about inflation, though. The Adobe Digital Index saw a massive spike in its report. I believe that was reported yesterday. And so if that's going to translate to CPI or PPI, then that becomes a concern for the Fed. But right now, I think the lack of data is probably a little bit more conducive for equities moving higher. This rotation trade is still also taking place. Yes, we have a down market, but if you kind of look at the expansion of breadth, it's actually very healthy, at least for now, where you have industrial names, transports catching a little bit of a bid, consumer staples. Walmart just hit the $1 trillion mark when it comes to market cap. So traders and investors are finding opportunities in this market, trying to get out of that concentration trade. And we still have Amazon, we still have Google to be able to report as well. That could also shift maybe some of the sentiment. So I think right now we're in an okay environment. I still get a little bit skeptical about volatility, especially the seasonality, where the middle of February usually is where we see volatility kind of re-rate higher. And I think that's still going to be on the radar here today. Maybe some traders are kind of noting that and once again getting into lower beta names rather than maybe some of the higher beta names that have been very popular over the last couple of months.
Okay, a rotation out of tech, as we mentioned. We've got that index down 2% as far as the sector performance is concerned. But going in the other direction are these materials. The sector is up 2%. Now, this coming off a nice rebound for some of the metals. I mean, silver's up 14%. It just feels like what goes up must come down, and then it goes back up again, KG. So just talk us through this price action.
Yeah, well, Friday, we made mention of this. The move is not going to be over. We actually had a test of a key area of support, that 50-day moving average, pretty much to the T when you're looking at the silver futures contract, and you are seeing some buyers trying to step in, catching that bounce a little bit. The de-risking that we've seen in this market over the last 3 years, 4 years, Sam, has been accelerated. It usually takes 2 months, 3 months in order to see a de-risking event. Now it could take 24 to 48 hours, and that's exactly what we are seeing. Now, I'm not saying that this is going to go back to new all-time highs, but it's not out of the question to see maybe silver getting back to $95, $96 before we see another test. The other indication that you want to look at if you are a trader or an investor is going to be the options on the SLV. There still was a significant amount of call side premium being built in, which is usually indicative of market makers preparing for buy the dip scenario. And it seems like we have that type of follow through taking place here today. And we'll see if it's going to be able to hold. We also have, once again, the material names, the Southern Copper, things of that nature, catching a nice little bid here today. But a lot of volatility within the metal space. Let's see if we actually see that kind of subside over the next couple of weeks.
A lot of attention on the earnings as well. We've heard from Pepsi, Palantir. You and I were talking about that yesterday. PayPal as well. Some interesting moves in response. But we look ahead to this afternoon's earnings. We've got big names like AMD, Chipotle, and Supermicro. But you're looking at Enphase. Now, I wasn't particularly aware of this company, but I like what it's in the business of. Why are you looking at this one?
Yeah, always got to throw a curveball in there. So Enphase is a solar provider, if you will. They provide the inputs needed for commercial as well as residential solar panels and things of that nature. So this stock has gotten hit fairly aggressively over the last couple of, actually last year and a half or so. A lot of the subsidies are falling off. Ever since COVID-19, we also did see a deterioration of demand within the European markets. And this is a company that has a very low bar going into this report. We did see solar stocks actually catching a bid over the last month and a half. This one did as well, but not as aggressively. Once again, they have residential exposure, so we have to be mindful of that. But if they're able to find a way to at least tell the narrative that they could capitalize on the commercial business, which continues to ramp up because of data centers, this could be one that actually could be a major mover in the market. You are seeing some call side exposure taking place leading up to this earnings announcement here. And this is one that, once again, very beaten down. Fundamentals aren't that great. Very low bar, but this one can be a pretty decent mover, both to the upside or downside if they are going to disappoint as well.
Okay, we'll be watching out for Enphase. Thank you so much, KG, for breaking down some of those key stories in the market for us this morning.